93% probability of recession in 2025, UBS just announced. And gold prices? They're repeating the exact pattern from 2008. This time is different. 5 signals are flashing simultaneously. Something that's only happened twice in 50 years. And both times led to a crash. Got money in your account? Currently investing? These 3 minutes will save you from million-dollar mistakes. Don't panic. I've got a specific 7-day plan. Let's start right now. Gold prices aren't just going up or down. They're signaling a liquidity crisis. Something most experts don't want to tell you straight up. Why does it matter? Because the last time this signal appeared, ordinary people lost 40% of their wealth within 6 months. Not because they didn't know, but because they didn't act. I know you're worried. This is exactly how I'm protecting my family's money. Step by step, day by day. In the next 10 minutes, I'll show you 5 specific signals, why they matter, and most importantly, a 7-day plan you can start today. Step 1 takes just 15 minutes. If you open CNN or Bloomberg today, what do you see? Stock markets near their peaks. USD still strong. People talking about a soft landing. But that's also what they said at the end of 2007. 6 months later, 40% of ordinary people's wealth vanished. Not because they didn't see the signals, but because they were looking at the wrong indicators. Which indicators are wrong? Most people look at the S&P 500, DXY, GDP. Those are surface indicators. They tell you about now. They can't tell you about 6 months from now. The S&P 500 is near its peak, but another indicator is screaming for help. Capital flows, where money is actually going. Don't just look at prices. Ask yourself, where is money flowing? In the next 5 minutes, I'll show you 3 free capital flow indicators to track every week. Hold on a second. Sounds complicated, but it's actually really simple. Imagine this. Driving while only looking at the speedometer. Looks fine, until you hit a curve. Now let's look at confidence in the USD and why money is changing direction. The most important question, where is money flowing? Why do you think central banks are suddenly buying record amounts of gold? This isn't a coincidence. 3 capital flows are all moving to one place. Gold. 1. Central banks. In 2024, they bought a net 1,037 tons, a record since 1971, about 2.4 times the 10-year average. 2. Gold ETFs and institutions. First 6 months of 2025, gold ETFs pulled in a net $28 billion, fastest since 2020. Gold ETFs are funds you buy like stocks. Net inflow means more money coming in than going out. 3. Retail investors. China, India, Turkey, Middle East. Physical gold sales up 40-60% year over year. When all 3 groups, governments, institutions and individuals, are all doing the same thing, that's a signal you can't ignore. Every week, just 10 minutes. Go to World Gold Council and check central bank gold reserves. Check GLD or IAU for net inflows over 3 consecutive months. Search for gold demand in China and India. Remember those 2 signals I promised at the start? Here they are. Signal number 1. Physical gold premiums in some Asian markets are up 5 to 8% above international prices. TV rarely mentions this. Signal number 2. ETF capital flows turning positive for 3 consecutive months. This is when you look at money flows, not news headlines. History doesn't repeat exactly, but it rhymes. Every time confidence in the dollar is challenged, money immediately flows to gold. 1,971, 1,980. US abandons the gold standard. Gold goes from $35 to $850, about 24x, 2008, 2011, financial crisis. Gold from $800 to $1,900, about 2.4x, 2020, 2024. heavy money printing, gold from $1,500 to nearly $2,700. Okay, that's 2 times. You remember the third one, right? If this is helpful, hit like so I can dive deeper into this series. Let's continue. You might think, this time is different. Governments have more tools. True, but global debt is now about 3 times higher than 2008. Same tools, worse disease. Timing matters more than direction. You need a system, not guesswork. In every crisis, there's always a window. Act within that window. You protect your wealth. Wait until everyone knows, and it's already too late. 3 weekly signals. 1. DXY, the dollar strength index. Above 105, green, monitor. 100, 105, yellow, prepare. Currently around 103, below 100, red, act immediately. 2. Physical gold premium, below 5%, green. 5, 8%, yellow, above 10%, red. 3. Fed and central bank statements. When they mention liquidity support, that's a worry signal. When DXY hits 100, increase gold allocation by 5%. Hits 97, add another 5%. 3 response levels. Level 1, green, learn and prepare. Level 2, yellow, act now. You have about 3-6 months. Level 3, red, damage control. Right now, we're at level 2. What I learned after 3 crises: preparation always beats guessing. Predictions won't save you. Preparation will. Step 1. Days 1, 2. Audit liquidity reserves. List all cash and cash equivalents you can access within 24-48 hours. Target: 3-6 months of expenses. Quick example: account a 50 million T plus 0, B 30 million T plus 2, total 80 million. Monthly expenses 15 million. That's 5.3 months. Completed step 1. You're already ahead of 70% of people who will procrastinate. Step 2. Days 3. Adjust portfolio safety buffer. If you're at 100% risk, shift 10% to defense, gold, short-term bonds, capital preservation funds. Principle: sleep well during volatility. I did this step for my portfolio back in September. Took 2 hours, and I sleep better. Step 3. Days 6-7. Establish gold buying rules. Write it down beforehand. DXY below 100, add 5% gold. DXY 97, add another 5%. Set weekly review schedule. Make decisions by rules, not emotions. 15-item checklist in the description includes 3 6-month liquidity calculation template, asset allocation table for 3 risk levels, 5 free sources to track DXY and gold, email script to send your financial advisor with 7 key questions, guide to setting up weekly review schedule. Save this video to refer back to when doing the checklist. Start today. 5 minutes to calculate 3 months of expenses. Step 1 done. Schedule 1 hour this weekend for step 2, 30 minutes Sunday for step 3. Total about 7 hours over 7 days. The difference could be 30-40% of your wealth. Information only has value when you act on it. This video is to help you prepare, not to make you afraid. 3 things right now. Download the PDF checklist. Comment, "I'm at yellow level," and the first step you'll take this week. I'll reply to every comment with specific suggestions. Subscribe and turn on notifications so you don't miss Portfolio Protection Deep Dive. The window is closing, but you still have time. Act today. Remember, those who prepare always beat those who predict.